As we've been reporting here, markets and governments around the world have at least two big worries right now, at least the continuing debt drama in Greece and the market meltdown in China. Yahoo Finance senior columnist Michael Santoli is here. Michael, good to see you again.
You as well, thanks.
We say at least because we're also dealing with a glitch that shut down the exchange for 4 hours today. We're also dealing with a Fed that's not sure when they're going to start raising rates. So there's a lot happening for sure. Talking about China, China is doing everything they can to try to right this ship. Is it working?
Not yet, no. We have a market in China, on the mainland stocks in China, in Shanghai and Shenzhen, that have just went explosive to the upside for about a year and a half. They were up 140, 150%, and then almost turned on a dime and are down 30 or more percent since just the past 3 or 4 weeks. So obviously that is not a controlled situation. The government has tried to really change the rules on the fly almost every day with a new way to support the market, emboldening brokerage firms to support stocks and things like that.
Which could be one of the problems, because you're not relying on market forces then, you're relying on government forces.
Exactly, but also I would say that even in the run-up, you weren't entirely relying on market forces, because this was an engineered public stock speculative rally. Basically what happened there is they loosened rules for individuals to own a lot of stocks. They opened up links between Hong Kong and Shanghai to get more money into the market. They really did have a public policy to try to get the equity market higher in China, and it overshot. They tried to rein it in, and now the pullback has obviously gone deeper than they hoped.
What does that mean for us right now?
Right now the impact seems very limited, because what happened in the markets in China was not very tightly linked to what was going on in the economy in China. The economy in China has been slowing down for a while. They've been trying to pull off this very difficult transition from export-led growth to consumer-led growth with only mixed success. There's too much debt in the system, and that was one reason they wanted stocks to go up. Instead of people borrowing money, they could buy stocks and companies could sell stocks. Now, it doesn't really mean, though, that right now with this market pullback, it's all of a sudden looking that much more grim for the Chinese economy or for the world economy. So right now, it's much more just that it's unnerving that you have this enormous market that's acting in such a wild way.
So Greece is now requesting this new 3-year bailout. They've been a little vague on specifics so far, but everything, it would seem, may come to a head on Sunday.
Yes.
What are we expecting?
It seems Sunday is now perhaps a true deadline. We've had a lot of false deadlines leading up to this. We don't know the specifics of what Greece might have in its latest proposal, which it's going to present in Brussels in the next day or so. We do know that for those 3 years, they're going to meet some of the conditions that they rejected probably in the last couple of weeks. I think the markets have kind of gotten to a point of feeling if it hasn't spilled over in a big way into other places in the economy and the markets yet, it probably isn't going to. It's probably going to mean further hardship for Greece, of course, if they leave the euro. But at least we're going to have some fashion of resolution by Sunday or Monday.
Is the Fed going to start raising rates, or are they too scared about what's happening?
The Fed is probably, there were the minutes from the June meeting were out today, and they sort of said, well, look, we're watching these situations overseas. And if anything, since then, things have gotten a little more dire. I think the Fed really wants to look for the excuse to move, if not September, then December. I think.
To where? Where would they move to?
They would go up by a quarter of a percentage point, most likely. I think they want to get at least one in by the end of the year, and they're really hoping that things settle down overseas and that the U.S. economy continues to look okay so they can get that done.
We've been at zero for how long?
We've been at zero for about 8 years. Or 7 or 8 years. And in fact, we haven't started the process of raising interest rates since 2004. So you had from 4 to 6, you went up, and then you slashed them to 0. And so it's been essentially this generation of investors that doesn't really know what it's like to raise interest rates.
Crazy times. Michael Santoli, thank you very much.
Okay, thanks.